Okay guys, so accounting is the process of collecting, recording, reporting, analyzing, interpreting those in the financial information and advising such information to the users, mainly to the owner for decision making. And what's the purpose of accounting? To provide the financial information for decision making. And then financial data is raw facts. Financial information, when we have sorted, classified, summarized, that means when we have worked upon the data and we have brought into more useful and understandable format is what we call as information. And non-financial information means the non-monetary information, maybe number of customer complaints, etc. Right. Then accounting process. Accounting process is actually what we are going to practice throughout our course, right? From today onwards. So starts with source documents, recording, reporting, and advice. Then the main, the outcome of the accounting process is what? Advice, right? Advice for us to give the advice. Basically, accountant is giving advice to the owner based on the information that the accounting reports provide, so that our accounting process should be a solid and reliable one, so that it creates, right, trustworthy information and quality information, right? Otherwise, you can, of course, you would know what will happen if somebody makes wrong decisions based on incorrect information, right? Think about a doctor that he was given wrong information about a patient, and then patient is given wrong prescription, wrong operation, then yeah, you can imagine what will happen, right? So basically, information is very important. Okay guys, next one. We have a conceptual framework in accounting. What is this conceptual framework? So conceptual framework is the frame in accounting, or the settings that is established to make quality information, right? So basically it talks about the generally accepted accounting principles that kind of govern the way we are reporting, right? So then when we say reporting, guys, right, it is not only relating to reporting, it is coming, or it is applied to accounting information as well, right? So now we have three of them, right? Of course we have three of them, yes. So then qualitative, so accounting assumptions, characteristics, and elements. Then however guys, we have discussed these things, and these are not actually quite new to you, because these things we have done in NIT 2, 1 and 2, right? Okay. Firstly, accounting assumptions, right? Accounting assumptions basically state how the information is generated, recorded, and reported. Mainly accounting assumptions guide us how to obtain information, right? How to obtain information. And then we have 4 of them, right? Mainly, right? You would do more in the uni if you do accounting, but however at this point we are doing accounting entity assumption. What does that say? So it says that records of the business, right, particularly assets, liabilities, and other things, revenues, expenses. So records of the business activities are kept completely separate from those of the owner. So let's say owner has its personal assets, liabilities, then the business has its own assets and liabilities, then we are not going to mix it up, right? We keep them separate.
Why?
Right?
Why do we refer business as an entity?
That is another term. entity and business firm, different terms. Yeah?
Yes.
And then also we can keep the business records from other entities. What is that? Maybe sometimes owner will have
business, like an owner has
more than one business, and then again we are not going to mix it up. Best example is Coles, yes.
Yeah, Coles.
So Coles, earlier Coles Express, Bunnings, Kmart, Target, all of them are owned by one business, West Farmers, right?
Not anymore. Coles left West Farmers.
No, not Coles Express.
Oh yeah, back then.
Coles Express left it, correct. So then the others, so basically now if that is the case, are we going to mix up the information of those businesses like Coles one with Bunnings and no, it's not going to work. So we are not going to mix them up.
So if the owner has a home, but that home also serves like the business shop.
Yes.
Would that be recorded?
It's a part of the business then. Yes.
Okay.
Correct.
So if it was for rent, but it's his personal home, that also would be a business expense.
Yes.
Okay.
Correct. Even actually I do that. Yeah. Because why? I basically operate from. When I prepare tubes and mark the papers, so all of them I do usually at home. Yes. Then I have to consider some parts of the home expenses as my business, which is allowed. That is legal. Okay, it is not illegal, it's legal. However, there are problems with that. Even I can charge depreciation, home depreciation also I can charge if I want. I'm serious.
Didn't you say premises can't be depreciated?
We can. Who said premises can't be depreciated?
Land can't be depreciated. Oh, like just like plots of land can't be depreciated. Like if you build a building on it, that
I have never said that premises can't be depreciated. Yes?
Yeah,
What did I say? Yeah, premises means what? Land and building both. Any man-made item can be depreciated. Yes. But however, lands, there are situations where we can depreciate lands. When? I have told you.
Like if it's like very unsuitable land or something.
On what?
Unsuitable land, like it's like.
If it is used for mining. Right, because you are digging it out.
What about farming? Wouldn't that take the nutrients out of like the ground? Would that also count?
No. Farming, nothing happens to the land. But if you are digging it, then land is gone.
What if you build a well? Like just one well?
No, that's not depreciated. Okay, guys? Right. Because it's just a temporary thing. Okay.
Wait. Yeah. So say you own if you work from home, like you do all your business activities at home, could you then make say almost all the personal expenses are business expenses?
No.
You say you buy.
Now, for example, I'll tell you. Even I use my for example, I don't have business vehicle, so my personal vehicle, right? So I use for business purpose. That means majority of its maintenance is part of the depreciation of my around 90%. Depreciation, maintenance, petrol, everything is part of my business expense.
So anything
You
that's
have to
separate.
pay less tax on that.
Yeah, obvious.
How much?
That actually I can't remember now. I have because it has because depreciation amount actually I don't know, Christian, because I have a tax accountant, so tax accountant does it for me. Basically, however, I also calculate, but I can't remember now. Maybe
if you purchase
around
vehicles, you get
$3,000. Yeah.
If you purchase vehicles and report it as a business vehicle, you get a lot of tax off.
Yes. Yeah.
So, does that apply to kind of anything for the business? Like, do you get tax off of most things?
Yeah, not anything for business purpose. Something that, let's say, if you purchase groceries for your home, then it won't be a business expense.
So anything you purchase on a business expense has to be depreciated, right?
Yeah, if it is a non-current asset.
Okay, but what if?
Even my computer, I depreciate. Even my iPad,
So
I
you have
depreciate.
a balance sheet for all of this or something?
Yes, I do.
What about if you're the business that you're running is a food like food.
Yes, then you can.
the
If
groceries-
you are running a restaurant, yes.
then the groceries can be
Yeah.
home.
Just start your own business at that point and just make everything part of the business.
No, you can't do that. You can't make everything part of the business expense.
Wait, what if you had like multiple businesses?
Yeah, you can do that.
Like, as a you,
Yeah,
you specifically had like 3
Yeah.
businesses,
Yeah, well,
then would you record your expenses in all
3 times?
Yeah.
No,
Oh.
you can't do that. That is before, because if the ATO is going to check it, right, they will first of all charge you a fine.
Wait, then how do you know which
And
ones
their
are
fines,
business?
their fines are like massive, like $2,000, $3,000. Yeah. Even if you have a now see, even if you have a company vehicle, right? So company vehicle, and then there is a fine. Like if it is like normally $100, it will be like $1,000, 10 times more than a normal one.
So then wait, then how do you know which one to record it for? Like which business do you record it in?
Yeah, that's the thing. You have to have a kind of a guideline.
So you only say
this
this.
business is that, and this one is that.
Uh,
Yeah, that's why you need to have. Let's say if you have a couple of businesses, you need to have different bank accounts.
I see.
Okay, guys. Now, yeah. So why do we do that? Yeah, why do we do that? Yeah, even like somebody asked me about the house depreciation. We can do it. Even I can charge part of the depreciation as my business expense. But one day, if I'm going to sell my property, then I have to pay a higher tax for the capital gain, because then they will charge as a business profit, and it will be charged a bigger portion.
Is
So
it
that
possible to appreciate items like reverse depreciation?
yeah.
Do we lie about it?
Not here, not in 3-4,
5-6.
5. Yeah. Okay, guys. Now, right. This one, accounting, entity assumption. So why do we do that? Why do we want to have a separation in between the business and the owner's activities? Because to basically make sure that we have included all the relevant information for the business, right? So that we comply with the characteristic of relevance, right? Because if we have mixed up the owner's information with the businesses, then or maybe other entities' information with the particular business, then it's not going to be relevant, right? So that if any decision making is done on such mixed information, then our decisions also can go. Okay. I think, guys, accounting entity assumption is pretty straightforward. Yes. Next one. Going concern is not that straightforward. Okay. What is going concern? Going concern is when we start up a business today, it is assumed to be continuing into the future indefinitely, right? To the goal, right? For a lifetime, yes. Right. And then, based on that, we are going to report in our business books, right? And then going concern assumption, as a result of that assumption, what happens? Going concern helps us to record and identify accounts receivable as an asset. Now imagine our business is going to be closed down next month, then how are we going to collect money from our accounts receivable? Then it won't be an asset, right? So then same thing applies for the accounts payable, loans that we have taken. So we have to pay them, and if the business doesn't continue into the future, then we can't actually identify accounts payable, loans as liabilities. And also, if they are long term, right, then we won't be able to identify it as current and non-current assets, and current and non-current liabilities. Now, the other one, guys. Because of this assumption, again it is helping us to do one more thing. What is it? I think somebody asked me a question. I can't remember the question, but however, yeah, this one. So So first of all, liquidate. What is liquidate, guys? Liquidate is basically a process applied for companies. What does that mean? There's a liquidator. If it is bankrupt, right? If it is insolvent, right? Bankrupt is the wrong term. Insolvent is the correct term. Right? If it is
what's the term?
insolvent,
What does that mean?
bankrupt. Opposite of that is solvent, not being bankrupt. Yes. Right. So then, so if a company is bankrupt, guys, what is it? A liquidator will come and sell all its assets and then get the money and then settle the accounts payable and loans. Right? Okay. Now,
How do you determine if a business is insolvent or solvent?
yeah, because basically there will be a point that what will happen is, if the business is making losses for a long time, then business will not be able to repay its debts. Then their lenders will sue the company. Then court will decide, now it's time to stop the liquidity. Then court will basically appoint a liquidator. Huh? Yeah. Hopefully they liquidate, though they don't liquidate people, yes?
It's a war crime.
Sorry? Yeah,
War
crime.
crime to like sell people or something.
Sorry?
Like sell people.
Sell people into parts, yes?
What is there like an accounting term for bankruptcy or something?
Accounting term?
Yeah.
Yeah, that's the thing. That's actually wrong. The bankruptcy is not a scientific term.
Like what is does bankruptcy just mean like when there's no
The real
money?
term is insolvent.
So does that just mean when there's no money left in the
Yes,
business?
yeah, technically bankrupt. Like bankrupt is like, what is it? Like a slang word.
So like when there's no money left in the business, like even after overdraft or
Yeah.
before?
And so you can have a bank overdraft and still be insolvent.
Yeah, of course. As I told you for now, that means you guys haven't understood what I said.
Wait,
There will be a point that the business can't repay its loans. Then, it is basically dragging. Then the lenders will come and sue the company. You know what I mean? Then court will decide where to liquidate. That's it.
so you said it's after a business makes consecutive loss periods in a row. So
Loss periods, and then as a result, can't repay their debts.
Okay, so it's at the point, it's at the point where they can't repay their debt.
Yeah. Then what happens is liquidation comes when basically there is a tolerance level for the lenders. They'll tolerate. Okay, then it is taking too long. Then they'll go to the court. Then court will decide.
If the business has multiple lenders and only one lender takes
Yes,
the loan,
still can happen. Yeah, can happen. Okay. Right. Actually, if you want, I can even talk about for a long time about that one, but no point, This one it's not part of the thing, and also it is coming to a legal part, legal studies, law, commercial. There is one subject called commercial law. I have done that. So commercial law, interesting, right? So then there are cases, right? The one I think I told you, do you remember in the business management? Garner versus Murray, about the partnership.
Which one?
Partnerships? No, you were not there. Garner was there. Remember? Can't remember? Yeah. Okay. Okay, now going concern assumes, guys, what is it? We don't have to liquidate, and as a result, we don't have to value our assets at the current market price. Right? Why do we need to value our assets at the current market price, current market value? Why? Because if we are going to soon get rid of our business, basically if we are going to soon liquidate our assets, our company business, that's where we are going to value our business at the current market price. Other than that, we don't have worry. let's say we are maybe like we are kind of running away from the country. Then we have to quickly sell the right? We have to quickly sell the what? Business.
Yeah.
Then you would be interested about the current market value, right? Then you have to quickly sell it. Yes, we are hurrying basically, right? We are hurrying up. Yes, yeah. So then our lenders are following us. Then we are going to sell it and run away.
How bad does business have to be for you to leave the country?
Yeah, I mean people do it. Yeah, I can tell you like funny stories, but no time. Okay, right. Yeah, they actually do it. Even like like a few years ago, 5 years ago, the KC Council, what do you call them? Like those, there are some members and the director board. Those people have kind of taken money. They have sold industrial land for basically living, for housing, right? So then they have made some money, lot of money. They have sold an industrial land for housing, to construct houses. It's not possible. These people, have done it and taken the money and ran away. Yeah.
Wait, some members of the council?
Yeah, members of the council.
Was
Yes.
this the bunch place guy?
Yes. Yes.
Oh,
Yeah. That's the one. That's the one. Egyptian? Yeah. Yeah, maybe. I don't know where. Yeah, they have run with that. So yeah, funny things happen. Yep. Okay. So guys, yeah, because of the continuity, we don't have to worry about valuing our assets at the current market price. Right. Then next one. Going concern also identifies the difference between assets and expenses, right? In terms of the duration. Why? Basically, expenses guys provide short-term economic benefits, and assets will provide long-term economic benefits, right? So that's the difference. And then going concern helps us to identify the difference between assets and expenses. And also, guys, same thing we are going to discuss a little bit different, though in the period assumption, right? Okay, now we are coming to the period assumption. What is period assumption? Now, period assumption says that, right, the lengthy life identified by the going concern is subdivided into arbitrary periods. What's arbitrary? At your choice, right? If you have a business, you can determine like what business period it should be, right? It can be a month, quarter, 6 months, year, once in 2 years, once in 5 years, once in 10 years, doesn't matter.
Does it say it has to be within 12 months?
Yes. Then after that, ATO comes and say, look, you can't, like businesses in Australia, not only in Australia, in other countries, same story. Then businesses in Australia cannot have a reporting period longer than 12 months. At most 12 months. Maximum is allowed 12 months. Why? For taxation purposes.
Do you know what those exact taxation laws are? Is it just because like at the end of every financial year the ATO will pay back like what they will collect the GST payable or give back the GST refund?
Yeah.
Is that why they say the reporting period has to be less than 12 months?
Yes, not only GST, yes. GST is only one tax. Right?
Oh,
Mainly, yes, mainly what is it? Corporate tax. Corporate tax means company tax on their profit. Yeah, basically.
So is it like income tax?
Basically medium, yes, like income, like medium and large businesses have to pay 30% of their profit.
Wait, what?
30% of their profit.
Isn't it 25, 27?
Yeah, that is for, as I said, medium and large businesses. That's for small businesses.
What counts as
Then, yes, that's what it is. So,
50 employees or something?
no.
Is it
Revenue
challenge?
Yeah, so actually there are different criteria. Right? In business management, we have different things. That's what we use in business management. 20 employee, more than 20 is medium. right? 20 to 199 is medium, 200 plus is large business. And then how ATO identifies is not based on that. They identify based on the turnover revenue. Yes, if it is more than 2 million a year, right? It is not a small business. It's basically medium and large.
That's how they do it in software development as well.
Yes. Yeah, 2 million means big amount. So usually 2 million turnover, right? Sales revenue 2 million. Then it is then basically turnover, as you said, less than that. Yes, 26.5. I think 26.5 was around that. They change it. Government changes it. So 26.5 or 27.5, something around that. Otherwise, it used to be 30% as well for them, like 10 years ago. We learned it for economics, and then now they have changed. Okay, other businesses 30%. Okay, on the profit. Okay, right. Then, guys, again, if you do accounting in the uni, you would do company tax as well, corporate tax. Actually, I did it for my VC, but you don't have it. For my VC, I did partnership accounting and company costs.
So would that be liability?
Yeah, it's an expense. If the expense hasn't been paid by the end of the period, it's a liability. If an expense hasn't been settled at the end of the period, let's say for example electricity, we didn't pay, so now this is what is today, we'll say by the end of October we didn't pay the electricity bill, and when we go to the next period, it becomes a liability. For the next period it's a liability, for this period it's an expense. Yeah, we are doing the ledger accounts. Yes. Okay, guys. Right now, period assumption. So the lengthy life is subdivided into arbitrary periods, right? But the maximum is 12 months. Basically, why we do that is to evaluate the performance, and then. So remember, guys, period assumption never says that it should be 12 months, but ATO is the one that comes and says that it should be 12 months, but for our simplicity, for our studies, we have included it in the period assumption, right? So then, also the second part is, guys, calculating the profit, we consider the revenues earned for a given period and expenses incurred for the same period to calculate the profit. Right? And the next parts, right? This one helps us again to distinguish the assets and expenses, because guys, assets provide economic benefits into future reporting periods. For example, we purchase a vehicle, that means we can use in this period, next period, and more. However, let's say you rent out a vehicle, or you use a taxi, you are using it only for this period, so you have to pay for it and becomes an expense for this period, right? If you want to use it again for the next month, again you have to pay the rent of the car, right? The car rent you have to pay again, but if you purchase a car, you can use again and again, and that's the difference, guys. Right? Make sense? So then remember, assets provide economic benefits to the next reporting periods, this and next, but expenses really they provide, or we consume the economic benefits within this period. Right? Next one. Period assumption is linked to comparability and relevance. Why is it comparability and relevance? Remember, firstly I will explain you comparability part. So we need to have
Same.
Sorry?
The same kind
Same, yes, same length, or otherwise what can you say? Uniformity in the length of the period, right? We need to have the uniformity. Yes, that means this time we had monthly, and next time we can't change it to quarter, right? So if we had the reporting period a particular length, we need to maintain that. if we breach it, what will happen is comparability is lost. So if we change the reporting period, comparability will be breached, and then guys,
What if we decide to change?
yeah, you can change it. Yeah, you can change it, but comparability says when we come to the comparability, we'll talk about that. Comparability says you can change accounting rules, right, practices, but not over and over. So let's say this time we are using monthly, next time we get bored, and then we change it to quarterly. Again, we don't like it. Again, we come back to monthly. That we can't do. Okay, we can't change over and over. Also, when accounting practice procedure is changed, we have to disclose. We have to reveal that in the reports, right? Which we call as notes. We have to report it. So that's a comparability, guys. So then period assumption. Why we do that is then we can evaluate the performance in that period, right? I mean, we can compare the reports, compare the performance in different periods. And the relevance, what is the relevance, guys? Because we have included only the information that is relevant to only that particular period. As a result, our information is completely purely for that period, so that we can rely on those information, right? Yeah. That's it for the period assumption. Any questions for that? Finally, guys, accrual basis assumption. Right, accrual basis assumption states that, what is it? Elements of the reports, as I said, accounting elements are recognized and reported as long as they meet their definitions and recognition criteria. Now, for example, remember the assets definition, right? Economic benefit as a result of past event and blah blah. Then basically those three parts of the definition should be met. Then only we will identify it as an asset. Right, next one is, guys, accrual basis assumption. The second part, I think everybody knows about it better than me. Yes. So accrual basis says revenue is recognized when they are earned, right? Rather than receiving cash or anything, right? So when the cash is received, the timing of the cash receipt is not important, as long as we have earned it. How would we identify that we have earned the revenue? The inventory has been forwarded to, or ownership has been changed to the customer, right? So if it is a service, if the service has been provided, and that's where we will say the revenue has been earned.
What about like interest revenue and
Yeah, same thing.
discount revenue?
Same thing. As long as you have earned it, regardless of when you receive the cash for that, you have earned. Right? Yeah. So let's say, for example, for this class, you are going to pay me next month, right? Or sometimes for this class, some people have already paid last month, and still, what is it? I have to identify it as revenue for this month. Why? Because the service was provided in this month. Yes, right, like that. Same thing for the expenses, right? So expenses we identify as long as they were incurred, right? What do you mean by incurred, guys? We have consumed the service, right? So that's the incurring of expense.
Could you explain the first point a bit more? Like, what do you mean by respective definition and recognition?
Yeah,
criteria?
as I told you, Alston, what is it? The asset, remember asset?
Mhm.
So asset is, what is it?
Provides economical benefit.
Yes, like that. So see, it's a present economic resource controlled by the entity as a result of past event.
Mhm.
That would provide economic benefits, right?
Within or after profit.
Yes, yes.
So,
then if you need to identify it as an asset, there are three parts, right? We'll discuss when we come to the accounting elements. Then all three of them have to be met. Otherwise, you can identify it as an asset. We'll see where we can't identify it as an asset.
So, when this is respective as recognition criteria, does it also mean, like, say you have like a credit sale, you recognize it as revenue in the period that it was sold, but you only increase your cash in bank in the period that you received it.
No, when it was sold.
But you only see the cash from it though.
No, you don't have to receive cash.
Oh. So you just recognize.
Even though it's a credit sale, it's still a revenue.
Okay, so you recognize the revenue only in the period sale.
Yes, that's what I explained. Right? Remember that I told you about the cross feed?
Yeah.
Like this. Okay guys, then we are comparing revenues earned and expenses incurred for the same period to calculate the profit accurately. Now you can ask me the difference between, now same thing is discussed in the period assumption. You can ask me what the difference between those two. Same thing guys, but in accrual basis it emphasizes more, stresses, emphasizes about that one and then calculating the profit accurately. Right? Yes. Then finally, accrual basis again linked to relevance. That's it. Okay, shall we discuss the questions? Yeah, sure.
So wait, then the revenues, even if they're paid in a different month, are recognized in that period.
Yes.
Does that mean the cash flows are recognized in the period that it's paid?
Yes, cash flow will be recognized. That's a good question. Cash flow is recognized or when and only the cash is affected.
Okay.
Right? Like the cash flow, remember when you do cash flow?
Mm-hmm.
Then cash is recognized at that point. But for
So the revenue and the cash flow
is
can be
two different
periods.
concepts. Yes.
So it can be the same transaction, but it can be two different periods.
Yes. For example, see flexible bill we will technically pay for October 1 only in November.
Mm-hmm.
But it's an expense in October.
Okay, so then the expense is recorded in October and the cash flow is.
Yes. Okay guys, shall we discuss firstly? Okay, shall we discuss? Right. Have a look at question number 1. Question number 1. What is it?
Accounting entities.
Accounting entity. Yes?
Yeah.
What is happening? James running his ship.
Delivering tea is like the main
Yes.
business model.
Yes. Titanic.
Yeah.
Right? Right? Okay. So then, so he's basically purchasing a laptop. So what do you think? Don't worry guys, don't write. I will discuss firstly, I'll give you the answer. Right? Firstly, question number 1, I'll give you the answers, but the question 2, you have to do it. No? Question number 2, you have to do. Alright, the first one guys, what is it?
Accounting entities.
Yeah, James bought his son a new laptop for his studies using the cash, right? Accounting entity assumption, yes? Yeah, why is that?
It's
Why
not,
is it
it's not relevant to the business.
not relevant to the business? And also, before that, what would you say?
Set entities, information separate.
Yes, the business, yeah, business or the entity and the owner are two separate entities.
Yeah.
So that we have to keep the records of the owner completely separate from those of the business, right? So then this should be identified as a what? Drawings. Yeah. Okay, next one. James thinks that his ship might sink. Yeah. Like Titanic, yeah, he is thinking it might sink, yes. So then what will happen? So that he may discontinue his business, decided to list all the assets as current and any further asset purchase as expenses.
But you can still sell tea though.
Yeah, but like that's what basically his business is. He's transporting tea. Then if his ship sinks, then he can't do it anymore. Come again? Going concern? Okay. You sure? Yes, going concern, correct. Why is that?
Because they're not assuming that business operations will continue into the future. they're assuming that it will stop, and therefore it's not like according to the
Mm.
stock
Yeah.
token.
Yep. Anybody wants to add any more? No.
Current, like all the assets listed as current, and they're not split into both current and non-current.
Yeah. So yeah, he doesn't have to do that. He doesn't have to categorize all his assets as current because why?
He's assuming
Bi-
that it's gonna be liquidated.
Yes. So, but however, going concern says that no, business is continue. Business is going to continue into the future indefinitely. As a result, we can obviously identify the next 12 months and after that, so that whatever the assets that would provide economic benefits for the next 12 months only will be current and then non-current, and also expenses. So a purchase of assets wouldn't be expenses. The reason is assets will have long-term economic benefits, whereas expenses will have short-term economic benefits. Yes, that's what the going concern said. Yes, right. Next one, part C, guys.
Period assumption.
Period assumption.
Yeah.
3 year right? Yeah, because it's longer than 1 year.
Good. Why is that? Why would you say period assumption?
Because in period assumption, it states that the maximum length for a period by like law is like
By the
maximum-
ATO.
By the ATO is maximum 12 months, and this one has 3 years, which is more than 12 months.
Yes. Yeah. So then they can't do it for 3 years, reporting periods. Then D. Going concern. Anything else?
Wait. Despite a loan that is due in 3 years. Like, also it's
Going concern. Sure. Very sure. Yes. Not period assumption. Yeah, you guys are correct. Going concern. Yes. Yeah, because some people will say period, not period. Going concern. Why? Because if it is due in 3 years, of course, we don't have to list same thing as all liabilities. We don't have to worry about all of them as current. Why? Because definitely the business will continue to operate for more than the next 3 years. So that doesn't have to be current, right? E.
accrual basis assumption.
Accrual basis. Okay, what he has done is correct or wrong?
Cash payment provide surplus in the next 5.
Wrong.
Wrong, yes. What he has done is wrong, because why? It should be identified as revenue only when it has been earned. Yes, earned. Yeah. We can say it's period assumption as well, right? Yeah, accrual basis both. Then second last, yes guys. Yeah. Next one, James business produced an income statement for the year that only reported the last 6 months revenue but a year's worth of expenditure.
Period or accrual?
Yeah.
Accrual.
Accrual period. Statutory accrual.
Period. Yeah, period assumption is more correct. Right? Why? Because basically, in order to maintain the evaluation of the performance in each period, then we have to correctly identify the revenues and expenses for the given period, so that we can evaluate the performance for that period. So this one, they have done only half of the, or six months worth of revenues only, so which is not a correct practice, right? Finally, last one. Sold goods on credit but decided to wait until the cash was received before recording it as a revenue. That's easy, is it? Sorry?
Accrual basis.
Accrual basis, very good. I think guys should be fine. Right, then let's write the answers, guys.